Welcome back to Dart Bank Insights. I'm your host, Brendan Andrews, and today we have on John Blossey, our VP and Senior Credit Officer at Dart Bank. John, thanks for coming on.
Hey, thanks for having me, Brendan.
We'll jump right into some questions on credit and why is it important?
Yeah, absolutely. So in the truest sense, when someone says, "What's your credit look like?" they're usually talking about one of their three main bureaus: the Equifax, the Experian, or their TransUnion report. Each are different. They're managed by three very large companies, and they aggregate data from all sorts of different sources. Whether it's your car loan that you have, whether it's a credit card that you've got somewhere, or if it's a RV or student loan, something like that. Anytime that someone's lent you money, they report on a monthly basis on how well you're repaying that loan. If you repaid it on time, did you take 30 days? Did you take 60 days to make that contractual monthly payment? And every payment or lack of payment has a positive or negative effect on your credit score. So the more that you pay on time, the better score that you're going to have, and the more likely that other creditors, other banks, other finance companies are going to trust you. So it's really when someone says, what's my credit look like? It's a summation of everything that you've done in your credit history and whether or not someone else is going to trust you.
All right, excellent. So let's say you don't have a great credit score and you're looking to improve it. What are some of the different ways you can kind of bounce that credit score up a little bit?
Yeah, absolutely. So there's two ways to go about it. Usually, if you're young and you're starting to want to establish credit, start small. Best thing that I tell people is put a couple $100 in a savings account, maybe $500 depending on what your institution does, and go and ask for a secured credit card. If you've never had credit before, this is a great way to not get yourself in trouble and not get overextended. If you've got the $500 in a savings account, more than likely your bank will put a hold on that $500, and then they'll issue you a credit card. You'll make monthly payments on it. You'll be able to use it just like a traditional card. But if for whatever reason you get overextended and you can't pay that $500 back, you can just go to the bank and say, "Hey, I'd like to pay this off. I want you to use the $500 in my account." Everybody's good, everybody's happy, and you're not going to negatively affect your credit by not being able to make your payments on time. But you've also had the opportunity to build credit, and someone gave you the option to establish that trust and have those things start to report. The other way is, let's say you have bad credit. Let's say your scores dip down because you've missed some payments, or another key factor on your credit report and credit score is how much of your available credit you use. One of the things that people don't talk about on credit cards is that if you take a credit card, and let's say you have, again, that $500 balance, if you draw it up to $500 and all you ever do is make the minimum monthly payments, and those are usually pretty small, probably usually a couple percent, maybe even just a percent of the outstanding balance, you're never going to put a huge dent into that balance. You're always going to float right around that $500, especially if you keep using that availability every month once you make a payment on it. So when you have less credit availability, it negatively impacts your score. So really, I tell people there's two main things to improve your credit score: pay down your credit lines, your credit cards, and keep making your monthly payments on time. Don't make the minimums, make more than you can, and you have to rebuild that trust. You have to rebuild your credit history so that your credit score will start improving.
That wraps up today's episode of Dart Bank Insights. Until next time, thanks for joining.